just so that we can touch on specific highlights that we want to talk about. So what I'm going to talk about is the consolidated statement of financial position and the consolidated statement of operations. So the financial assets, which are the economic resources to the municipality. So these are driven directly from the statement of financial position. So as you can see that as a total, we have increased our assets over the year by $497,000, which has remained relatively consistent with the prior year. The main increase resulted in the shifting of some resources to some portfolio investments, as well as an increase in accounts receivable, which was the result of some drain billings at the end of the year, as well as some funding from the Government of Ontario. So all in all, not a lot of changes from the previous year. So our financial liabilities, which are the obligations of the municipality, so things that we owe, are pretty much made up of our accounts payable, accrued liabilities, as well as our long-term debt. So as a overall presentation, you can see that over comparison from 2012 to 2013, we've reduced our obligations by $1.975 million, and the majority of that is made up of the reduction in long-term debt. So I did want to touch on long-term debt as a whole, and as you can see over the past 2 years, the long-term debt has decreased $5.6 million as a result of a pay down in 2012 of $4 million, and our regular payments in 2013 of $1.6 million. So it has been decreasing over that time frame. Now, included in the statements as one of our financial statement notes is our long-term debt repayment schedule. So each of the different loans have certain terms that have to be repaid, so this schedule kind of emphasizes the cash flow requirements needed to repay those. So as you can see, 2014 is a little bit higher, which relates to the construction loan for this actual building that we're in, the Legacy Recreation Center that is set up as a construction loan at this point. It has no terms, and therefore we have to put as a 2014 payment until it's actually negotiated with some terms and payments scheduled. So just encompassing in both of the previous two slides, the total net financial assets and the financial liabilities. The net financial assets less our financial liabilities, we end up with our net debt, which essentially is a good financial indicator of the overall health of the municipality. And you can see that over the last year, it's decreased by $2.4 million. It's on a decline, or a decreasing decline. The majority of the financial liabilities right now are made up of the long-term debt. So it seems that that is a positive trend. So in the statement of operations, it's made up of our revenues and our expenses. So we're just going to touch on the revenues shortly here. Just the main items made up of this are the taxation lines, the government grants, and the user fees. And each year the council sets a budget on where they expect these revenues to be. And we met those budgets just slightly under by a variance of $134,000, or 0.62%. The main difference ties into this user fee line, which from our discussions during our audit engagement related to some budgeted revenue lines, which was some revenue received for some projects that didn't go ahead, that were delayed until future years. So if you were to exclude those items, our revenue variances are in line with what we had budgeted for the year. So our expense lines on the statement of financial position, we are required by, our PSAB requires you to record the expense lines by major function. So as you can see, overall, there was a positive variance, and we budgeted $20.746 million. We actually spent $20,429,000. So I just want to skip to the next slide because it kind of gives a breakdown over, over by object, which is another exposure within the financial statement. It kind of breaks it down, kind of shows where overall the savings came from. So as you can see, the savings of the $317,000 were a result of the wages and benefits, materials, and fees and contracted services. So we were under budget on those areas. So that resulted in the overall positive variance for the expenses. So overall, when you add your revenues less your expenses, we ended up with a surplus of $1.1 million on the financial statements. So it kind of gives you a snapshot of the financial statement of financial position as well as the statement of operations. So just some other highlights that I just wanted to mention today that you'll notice in the financial statement is, number one is just a prior period adjustment that was discussed through Janet's report, which really relates to a unreported capital assets that weren't shown on the financial statement, that you guys were still using them, they just weren't encompassed on the statement. So as a result of the accounting standards, we need to put them on there and adjust them through the accumulated surplus. Another item that we are required to disclose is any commitments or any material commitments for in future years. So you'll see that in the notes of the financial statements, just any commitments that the municipality has going forward into future years. And finally, we also just wanted to mention just the pension agreements. There is a note on the financial statements that indicates the contribution that the municipality needs to make to OMERS for its employees. So as you can see, the actual rate the contribution rate is increased that OMERS requires for its pension fund basically has gone up from 8.3 to 12.8 to 9% to 14.6%. So that has increased that as well. Included in your package as well with the financial statements are just two other statements that we prepared for you, and one of them is the forest EIA. And just to highlight just some of the points from that, you can see the total assets for the current year are at $24,000. So we're kind of jumping down in levels of dollars here, but they have a surplus of $3,400 during the current year and have an accumulated surplus of $22,000. So they certainly they didn't run into a deficit this year and did well. And we also provided an unqualified audit opinion on the trust fund statements. So that includes like a cemetery. So there's total assets available of $330,000. Basically, that is the amount that's available to be used, and there's not many liabilities included with those statements. So I hope that I've been able to give you some sort of snapshot of the financial position of the municipality. And I'm just going to turn it back over to Pete. They're going to go over the final letter to discuss with you guys. Thank you.
Thanks, Jamie. So part of what we have to do is, at the end of the autumn, we have to go over a final letter to those charged with governance, which is you as the council. It's basically a follow-up to the planning letter that we sent out before the audit started. So in this letter, we're required to update our independence to you and just state any issues that came up that would possibly impair our independence. So because we provided assistance with preparing the financials and we did some journal entries as well, it creates what's called a self-review thread to our independence, since we subsequently express an opinion on these statements. So management, we have to put in place some safeguards, and some of those would be that management created the source data for any entries. They reviewed and approved all the entries that we made. And then someone other than the preparer in our office also did a review on those entries and financial statements. So actually there was two of those. There were the audit senior manager and myself that both looked at those. So we can confirm that we are independent with respect to Hampton Shores as of today's date. We also need to disclose any changes in our materiality. You can see that it's dropped